Hello everyone and welcome back to the course. In this lesson, we will take a look on how to use Speed Arc tool. But before that, I would like to inform you that this lesson was supposed to get added in course last year to retracement trading section. When the section got updated, I forgot to upload video and no student informed me about a missing lesson till end of March 2020. Next, I didn't keep backup of previously created lessons, due to which I have to create lesson on Speed Arc again. You may find flow of this lesson little different as compared to previous lessons because there is 1 year difference between this lesson and previous lesson of this section. If that causes any inconvenience, then my apologies in advance. With that said, let's get to the topic. Now, Speed Arcs is a tool that is used to detect end of retrace and where the current trend might end. The tool is definitely not perfect, but it for sure gets job done. During use of this tool, scale of chart needs to be adjusted. The change of scale usually disturbs the points between which this tool is used. Therefore, tool is always used with magnet on. This is an important condition to use this tool. If you wouldn't use magnet, you will get faulty results. In front of you is 2-minute chart of Nifty in downtrend. The price move from point A to point B is our trending move. First, select the Speed Arc tool from Geometric Tools section. Then, turn magnet on and draw a line between point A and B. Take a careful look on setting that you need to set up on Speed Arc. Your trend line should be thicker and you should have 1 and 1.6 box checked. We will not need other parameters. Once everything done, you will see Speed Arc formed on chart. But things don't end here. Now you have to adjust scale of chart in such a way that point C should be on semicircle. The reason we want point C on semicircle is that point C is first higher low of retrace. In uptrend, we look for first lower high of retrace. After adjusting scale to get point C on semicircle, this is what we get. As soon as prices exit the semicircle, we assume the retrace has reached its end and we should start looking for trading opportunity. As you can see, retrace ended here and we had two trading opportunities. First, we got double top and second, we got support break. Now to know where the trend might end, we draw Speed Arc between starting point of first trending move and starting point of next trending move. Then we take the point where the last trending move ended into semicircle. In current example, point A is starting point for first trend, point D is starting point for new trending move, and point B is where last time trend ended. Once we draw arc, we need to adjust scale of chart to place point B on semicircle. After adjusting scale, the place where price exits the new cycle is where we assume trend might end. Keep in mind it does not end at that point all the time, but even if trend fails to end after price exits circle, it can give us information about where trend is going weak and where we should start considering placing tight stop loss. Same we can do for uptrend. Take a look on this chart. On point A, first trending move starts. At point B, first trending move ends. Point C is first lower high of retrace and point D is where new trending move starts. First, we draw arc between points A and B. Now, we adjust scale to place point C on semicircle. Now you can see when prices made an exit from semicircle, retrace ended. Now we draw arc between point A and point D. Now we adjust scale of chart to get point B on semicircle. Here you can see price making an exit from new semicircle. you can either exit your position right there or start trailing SL. Now, important question to ask is on what basis Speed Arc tool works. First of all, Speed Arc is a locus based tool. All locus based tools provide geometric type of analysis. A locus is defined as set of all points whose location satisfies one or more specified conditions. In other words, if there is some moving point on chart and that moving point is satisfying some set of rules and condition, then the point, line, curve or any other figure on chart that is representing this condition is locus for that moving point. In previous lessons, we already learned that price moves in form of cycles. A price cycle is nothing but a semicircle or part of circle whose half side is called bullish side and other half is called bearish side. If bullish side is bigger, we call it uptrend. If bearish side is bigger, we call it downtrend. Again, we learned the second price cycle is either bigger or equal to 1.6 times of first cycle. So the arc drawn to find end of retrace is locus that satisfy condition that all points are part of current price cycle. As soon as the condition fails, we assume new price cycle has started. To identify end of trend, the drawn arc has locus condition that new trending move should be at least 1.6 times of last trending move. Therefore, the trend doesn't always end near 1.6 because in majority of cases, price move is bigger than 1.6. But it still can be used to know from what point we can assume the trend might be weakening. And it will also inform you to exit trade in case the price move is about to fail. Speed Arc tool does not only place condition of 1.6 price move happening, but it also places condition in what time it should happen. For example, take a look on this chart. Here we draw arc between previous and new trending price move. The condition is price have to complete 1.6 price move before it exits the semicircle. Here price made an exit from semicircle without completing the required price move. This would have given you an idea that the trade has high probability of failing and you might have to exit before taking losses. In general, we can say trend line, support and resistance are also forms of locus which need to satisfy some kind of conditions. For example, the black line was acting as significant resistance. At significant resistance levels, prices visit multiple times. In mathematical terms, we can say significant resistance line is locus with condition buying bids should get satisfied multiple times. Failure of this condition means buying bids might not get satisfied for some period of time. When that happens, we say a resistance has successfully broken and we take trade. On chart, you can see just before break, price made a successful visit to significant resistance level. Then we see 3 resting candle on that level which gave me resistance in break trading scenario. At this level, I bought call option for 8,500 strike price on Nifty. At first retrace, it hit stop loss and first profit was booked. Then you can see prices started retracing. The retrace type is ladder retrace. Now problem with ladder retrace is that you cannot draw counter trend line on it. Next, buying has to be done on break of ladder structure, which you can see broke at suspicious level because trending move was way too big as compared to retrace. This could be trap where you buy and price start to fall. The risk is automatically high because markets are falling down because of coronavirus outbreak. If price fails to move up, there are high chances SL might get jumped and I may end up with humongous loss. So we need an extra level of confirmation before we place buy order. Here's how we got that extra level of confirmation. We know prices bounce off support. Now while retracing, prices do fall by creating temporary support levels. Now we place a support on last but one lower low. This can act as support on which we can expect selling bids to get satisfied. Here we can see prices bounced off that support and moved up. Now we know if support is active, prices will not come back to support and it will start moving up. In other words, we can say if resistance breaks without price coming to this support level, we will be sure support is active. When that happened, I bought call option for 8,600 strike price on Nifty and second profit was booked. You can say that I used characteristics of support and resistance as condition of locus. To that I would say I didn't use them as condition of locus because support and resistance are locus and characteristics of support and resistance are conditions that a locus must satisfy. Technical trading is nothing but mathematical problem solving on live chart. To solve problem, we have been provided with tools and indicators. I am a professional trader and I trade for living. And I can tell you how well you select the tools when chart is live decides how good of trader you will become. Very few of my losses come from actual technical failure. Majority comes from wrong problem solving approach or lack of emotional control. The day I will overcome those two problems, I will go from average trader to a great trader. Understanding of concepts is everything. There is no such thing as one approach fits every condition. You see what is happening on chart and you select your method of analysis, risk management and profit booking strategy. Unless you are good with all three of them, you won't be able to trade. I hope that helps. Have a nice day.